Hello, welcome to Accounting with Mr. H. In this video, we're going to look at the purchases budget and we're going to look at a couple of questions involving the preparation of a purchases budget. Please do subscribe to the channel. Thank you if you already have. Like, share, comment on the videos. Let me know what you'd like to see in future videos. Let's get into the first question then. So this one here, let's scan down the left-hand side. Shields Limited has provided the following budgeted sales information, and I can see I've been given the budgeted sales revenue for the 4 months up to April. And then point number one, the selling price is expected to be £5.60 per unit in January and February. The company intends to increase the selling price by 15% from the 1st of March. It will then keep this new selling price for the remainder of the year. Point two, it is the company's policy to maintain closing inventory levels at 20% of the following month's sales. And point three, the inventory at the start of January is expected to be 2,510 units. And what's required, prepare a purchases budget in units for the 3 months ending 31st March. You'll see in units is in bold. Purchases budgets can be prepared in units or even in pounds. The second question in the second part of the video, we're going to look at one in pounds. But this one here, they want to know basically how many units of stock, whatever it is that this company buys and sells, how many units do they need to purchase ready for resale. So you'll see over on the right hand side I've got a quick title, who, Shields Limited, what is it, a purchase budget, when for the 3 months ending 31st March. And then I've laid out my budget with a column to put my narratives and then a column for each period, in this case each of the 3 months, January, February, March, that are required. And what's also important to note then, and to remind ourselves, is that this budget we're being asked to do has got to be prepared in units. But if I go to the beginning of the question, they've given me the budgeted sales information in pounds as revenue. So I can't put the pounds in the budget and then the units. I've got to convert then the pounds, these sales, the revenue, into units. And that's going to be my starting point. So let's get underway. So there's my first narrative in my budget. I'm going to start with the sales. That's always going to be logical for a purchases budget. If I'm trying to work out how many goods I need to purchase, well, surely a logical starting point is how many do we think we're going to sell. So the sales would always be at the top, the first row of a purchase budget. And then I need some workings then, like I said a moment ago. So if I look at January, the forecast sales for January are £70,280. And point one told us that the selling price is expected to be £5.60 per unit in January. So if I divide then 70,280 by the £5.60, that tells me that their budgeted sales for January in units is 12,550 units. And there it is, I'm putting that in my budget. I can do the same for February. So this time the revenue budgeted for February, £78,960. The price, it says, is still going to be £5.60 in February. So that means the budgeted sales in units for February, 14,100. And then March, if I just go back to that point one again, it told me the company intends to increase the selling price by 15% from the 1st of March. So I've got my budgeted revenue for March is £92,092. But at this time, I need to divide that by the new selling price. So £5.60 plus 15%. So you can see I've done it as a decimal working there, or you could work out the new selling price. So add 15% onto £5.60, which is £6.44, and then divide that into 92,092. So we now know then the budgeted sales for March in units is 14,300. And then the next couple of rows follows very similar to a production budget. I've got a video on production budgets, and you'll notice some similarity. So it starts with the opening inventory, because if I go to January then, they're expecting to sell 12,550 units. So that means they've got to surely buy 12,550. Well, not if they've already got any. And point 3 told us the inventory at the start of January is expected to be 2,510 units. So if they've already got those, they won't need to buy them. So I'm going to take those away. But if the company wants any inventory at the end of the month, I need to add that on because they need to make sure that they've purchased that, so they've got it in stock in their warehouse at the end of the month. And point 2 for this company, the company's policy for this company is to maintain closing inventory levels at 20% of the following month's sales. So we've already worked out the sales for February in units is 14,100. So 20% of 14,100 is 2,820 units. And then I can total up then that first column for January. So they're budgeted to sell 12,550 units, but they don't need to buy the 2,510 that they'll already have, but they do need to purchase the 2,820 that they want to have at the end. So overall, that means in January, this company is budgeted or needs to, is expected to purchase 12,860 units. And then I can do the same for February. If the closing inventory in January is 2,820, well, then that will become the opening inventory in February. We know that the company keeps 20% or wants to keep 20% of next month's sales as closing inventory in the month before. So if I look at March, the sales are 14,300. 20% of that is 2,860 units. And then total up February. So in February, the budgeted purchases is 14,140 units. And then finally into March. So if they're finishing February with 2,860, they'll start March with 2,860. So take those off as the opening inventory. And then, although I'm not being asked to do the budget for April, I'm going to have to use the figure for April to enable me to work out the closing inventory. So if I go back up to the top of the question, the budgeted sales revenue for April is £101,108. But remember, from point 1, they're increasing the selling price by 15% from the 1st of March, and it says it will then keep this new selling price for the remainder of the year. So in April, they're still going to have this new higher selling price. So there's my working, got in the working box. So the budgeted revenue for April, 101,108, divided by the new selling price, gives me 15,700 units. So if that's what they're planning on selling, or what they're budgeted rather to sell in April, they want to keep 20% of that, or have 20% of that ready at the end of March. So 20% of 15,700 is 3,140. And then total at March, and we can see the budgeted purchases for March in units is 14,580. And there's that question complete. Okay, and another one then, you get 2 in 1 in this video. Just a slight variation here. Sometimes you can be asked to prepare a purchase budget in pounds. And so there's a couple of ways this could come about, which I'll explain at the end, but let's just get stuck into the question first. So Allen Limited intends to start trading on the 1st of January. The company has provided the following budgeted sales information. So January through to March, 13,860 per month, April through May, 18,480 per month, June through August, 19,140 per month. Allen Limited plans to operate with a markup of 65% on all products sold. The company does not expect to have any closing inventory at the end of each month. All the budgets are prepared on a 2-monthly basis, and required to prepare a purchases budget for the 6 months ending 30th of June. So again, I've got my title, like the first question. So who, Allen Limited, what, purchases budget, when, for the 6 months ending 30th of June. You'll notice in point 3, it said all the budgets this company prepares, they prepare on a 2-monthly basis. So that just means they do 2 months in one. So if you look at my columns, I've got my first column for narratives, but then I've put January and February together, March and April together, May and June together. And just like the last budget, if I've got to consider what it is we need to purchase, the logical starting point is what are we budgeted to sell? So my first row in any purchase budget will be the sales. And if I look over at the information on the left, in January to March, they're expecting to sell 13,860 per month. So I want 2 months worth here. I need January and February. So 13,860 multiplied by 2. So the total budgeted sales in pounds for January and February combined is 27,720. Then do the same for March and April. Just be a little bit careful because the first bullet point has got March in. January through to March is 13,860 a month, but April is in the next bullet point, and April through May is 18,480 per month. So I need 13,860 for March plus 18,480 for April. Means the total combined sales for March and April is budgeted to be 32,340. And then similarly for May and June, again, just be careful because you can see it's split across the bullet points here. So in May, the budgeted sales is 18,480, and I need to add that to 19,140, which is the budgeted sales for June. Gives me a combined budgeted total then for these 2 months of 37,620. Now in this budget, as I say, we're preparing this one in pounds. I've already started by putting the pounds in the budgeted sales revenue. I couldn't prepare it in units because I don't have any information, for example, about selling prices in order to be able to calculate how many units that revenue is, like we did in the first question. But what they have told me is that Allen Limited plans to operate with a markup of 65% on all products sold. So what could happen in these sorts of questions is they could test your understanding of some of the accounting ratios in order to work out the cost or the budgeted cost of the purchases. So this one here then, markup, so 65%. So whatever the business pays for their goods, they add on a 65% markup to reach the selling price. Or put another way, whatever the cost of the purchases is, add on 65% and you will get to the sales revenue. So my next row is going to be an adjustment for the markup. And let me get a workings box. There we go. So if I look at January and February, the sales we said is budgeted to be 27,720, but that will include the markup, the 65%. So that figure is now effectively 165% because they had the original purchases cost, which was the 100%, and then they added on 65%. So what I'm going to do then, you can see to my workings, I'm going to take the 27,720, I'm going to divide by 165 and then multiply by 65. And that tells me the markup in January and February is budgeted to be £10,920. I'm going to take that away, and then that gives me the purchases, the budgeted cost of purchases for January and February combined, which is £16,800. Just a couple of things to consider here. One, purchases is always shown at cost. Hopefully you'll know the rule about inventory is always shown at cost, or NRV if that's lower net realisable value. But purchases is a cost figure, whereas sales, that includes a markup figure. So that's why we're making this adjustment. The purchases budget, we need this last row to be at cost, not at selling price. And another thing just to be careful of, you might be thinking, well, couldn't I have just taken 65% away from the sales, the 27,720? And the short answer is no, because we're starting, what you've got to think is the purchases, the cost was 16,800, and to that they add on 65%. So in order to work backwards, I've now got to see the sales as like 165%. You can always double check it, because if you take the purchases that we've got now of £16,800, if you add on 65% to £16,800, then you will get 27,720, which is the revenue figure. So there's always, quite often a quick way of double checking things. Then I can do the same for March and April. So back to my workings. So 32340 divide by 165 multiply by 65 gives me the markup. Take it away and there's the purchases cost. And then the final month, same idea. There's the working. So the markup 14,820. Take it away. So the budgeted cost of purchases for May and June, 22,800. Just a final thought on this one. I've given a few different things in both of these questions. These things aren't unique to each question. So, for example, the fact that Allen Limited prepares its budgets on a 2-monthly basis, that could happen. It could have happened in the first question we looked at. Another thing to consider is it could be that the business wants to have an even flow of purchases each month. And I've got something on that in the video I've done on production budgets if you want to check that out. And just a final thing to say, this question used markup, but another question could just as easily use something, perhaps the gross profit margin. So instead of having sales markup purchases, you would have sales and then the gross profit margin and then purchases. And you would have to adjust the sales figure for whatever they told you the gross profit margin was in order to get back to the purchases. And there we go. I hope that's been helpful. Please do subscribe, like, share, and comment what you're finding useful and what you'd like to see in future videos.